Good day, all. Ira Epstein of Linn Associates on this Wednesday, the 20th of August, 2019, FOMC day. Risk on day. The market liked what it saw from the FOMC notes. It had already been up, and it never did get much of a break. I think it went from this 295 up on the day in the Dow to maybe the 230, 240 up on the day. And then late today, because remember, we settle at 315, it even went higher than that, charging on towards the day's highs. Gold is probably down $2, $3 from here. Silver about a nickel lower, and we were up in the dollar index. But as I said, it's something of a risk-on day. And you can see what this market has been doing. It's fighting at the 18-week moving average. Now, this is a chart of just closing prices. And admittedly, the week is not over. But you take it from Sunday through where it's at, and right now for that time frame, we are up 37.75 points. The 18-week average of closes is 29.2145. We're slightly over that, but we haven't taken out the last high right here. We're at a zone where the market's trying to figure out what does it do, how does it finish up this level of the summer, or does it do nothing and wait for Friday's FOM speech, which will be given by Jay Powell at the Jackson Hole Conference. Tomorrow, we start getting a slew of information from the attendees. A lot of the central bankers from all over the world attend Jackson Hole, and we look for clues. What's the ECB going to do? What's Japan saying they're going to do? Be a lot of people there. You'll be hearing it all day long on financial news, and it is important. When we look at a daily bar chart, you're just flattened out here. You're just going up, down, sideways. You're going nowhere. You're spinning wheels, and in that, the algorithm traders are having a ball. I just heard today that Goldman Sachs is about to raid other firms that trade via algorithm traders. It was in, I think, Bloomberg today, and they're going to build a division of 100 people that are algorithm-based. I got a question. If algorithm traders always won, is the market that big? Because somebody's got to lose. For every buyer, there's a seller in a futures contract. I just don't get it, how they can all be winners. I never did. I think I understood it when Citadel began, but now that the field's crowded, how do you do that? We'll find out in due time. But you're getting the spinning back and forth right here. When you look at the swing line, you've got a pattern of lower highs, but you have higher lows. I mentioned that yesterday. I think you're caught in like a no man's land for a moment here, and I don't know what to do with that. If the market gets over 29.32 at that moment, you will have had a pattern of higher lows and higher highs. That would be bullish. The 18-day average and the 100-day average intersect right here. 29.16, 29.14, 65. What I don't like is that 18-day average trajectory looks like it wants to go under the 100. I'm going to say I don't know what's going on with that right here. I'm waiting to see. When I look at Bollinger Bands, they're not in play. They were in play back here, then you got over them and you never came back down to it. The 200-day average is this line. The Bollinger Band is this one. Way up here, new highs is where the other one is, but that'll fall very quickly. And I'm telling you fast, the way that the sideways action here, I know what the math does, and it's going to slip on you very quickly right here. In terms of momentum, it's up. So here's what I have. I have a market that closed over the 18-day average, so the bias is up. The swing line is down and momentum is up. Momentum is already into the 66 level. It will take nothing tonight to get it over a 70 number, which I consider overbought. Does that mean you can't explode? That's not what I'm saying. I'm saying as a technician, if I took the name of the chart off, this is sort of a weird chart trying to get into right here. The NASDAQ's a prettier chart. The NASDAQ is in an uptrend. Higher lows, higher highs, over the 18-day average support. Back at the combination of the 18 and the 100. However, here too, it's looking like what's going to happen over the next day or two is going to be important. Are we getting a negative crossover where the shorter term average gets over the 100? One of the ways that I think the pros are going to play this is they're going to look at today's low, and as long as it's not taken out, they'll say they'll let the moving averages take care of itself. They prefer the long side. Some will say, you're already overbought. You got a 72 reading. Why should I get bullish up here? Again, you got this problem coming right in front of you. When we go to the Dow, the trend turned up today. Now you have an outside day up. You got higher lows. You took out that high and you closed right over it. So the resistance is going to be 26,307. From where we're at, that's approximately another 80 points higher in the Dow. The trend is up, well, let me say momentum is up and not overbought. The trend is up, the bias up. Until today's low is taken out, the market's looking okay. The problem is if one buys it here at 26,203, let's call it, they got to put a stop at 25,871 right under that low. They don't have to do anything, but that's what I think they do. I think that's a lot of risk to go into the Jackson Hole meeting wondering what's going to be said one way or the other. I think we all expect QE, a race to the bottom on interest rates, but bankers have a way of upsetting the pie. The Russell is not in an uptrend. It's got the swing line up, but it's under the 18, the 200, and the 100-day average. So this market still has its own set of problems with different layers of resistance in it. On the VIX, do we hit the 100-day average and find support there? You're already oversold. This has been a straight down move. Look at those 8 points that the market failed on. It's been violent. And what that's telling you is the volatility's come out of the market. Okay, so people are a bit more comfortable. In the bond market, I'm concerned right here with this momentum. If it's not up tonight, you're going to see that embedded reading slip, and that could mean the market makes a run back towards the 18-day average of closes. Again, the question is, do you want to go into these markets? First of all, you're over the 18-day average, so the bias is up. Momentum is what it's about, and if you lose the embedded reading, then I'm looking for those two to come together. And the third thing is, I don't know that I want anything to do with what the bankers are going to say over this two-day period. In the 10-year notes, if you look at the momentum, you lost it. You lost the embedded reading today. I'm going to take you away from today. Both numbers over 80, both over 80 on Monday, both over 80 on Friday, both over 80 on Thursday, and the day before. So you've had this embedded reading where the market made a run, and then it started stalling out, and as of the close today, the momentum is lost. Now, the only time you can get that momentum back is the day after you lose it, but it will take a strong move to the upside to do that. So a warning sign is back out on that. When we come over to TLT, you lost the embedded reading here too. So my horns, if you will, and I'm sure I have them, are out, my antenna, saying, I don't know, what is going on here? And I understand the market's taking a cautious look at what it's doing. In the dollar index, nothing backs off. This market's still got the lower low, higher high, which is not a trend. It's an overbought territory. Resistance is back up here at the upper Bollinger Band with support at the 18-day average. Again, not trending. In the eurocurrency, you have lower highs. You've had a lower and low. You went into a pause stage over the past 48 hours, and you're oversold. Again, you got to think of the central bankers meeting. Now, in the British pound, tomorrow, I know that Mr. Johnson, the PM of the UK, is going to meet with Mr. Macron, the head of France. Mr. Johnson met with Ms. Merkel out of Germany, and she basically sounded like she was opening the door for 30 days for Mr. Johnson to present something that maybe the European Union would look at. The problem for her is she doesn't speak for the European Union. She speaks for Germany. Mr. Macron doesn't speak for the EU, he speaks for France. He's against it. Then September 3rd, Parliament comes back, and their job, from everything I'm reading, is going to be to try to unseat Mr. Johnson or stop him from no Brexit, whereas France thinks there is no Brexit, and they think there's a hard corridor coming up between Ireland, and that could be a real problem for movement of goods. It's a mess, and you see that. Look at how the Bollinger Bands are slipping in. Dangerous market, even momentum is waning to the upside. In the Japanese yen, all you've done is you took out the fear gauge. You went up on this news. This was the fear. You fell right back into the 18-day average, and you're sitting. Makes perfect sense going into this week's Jackson Hole meeting. In Bitcoin, the market came down, finished off at 10,115. You can see how low it got to 98.50. It's been in a downtrend with lower highs, lower lows, resistance back at the 18-day average. So you're getting one heck of a correction from up here where you got into the 12,500 level back down to the, 98.50 level. So if you bought wrong, it gets very expensive. This is still extreme volatility. As for the differential between Brent and WTI, I think we just discovered that the 350 area is probably too cheap. You can see how the market's lifted up. Target might be that 18-day average of closes back at the $5 level. You can see in this market you got a lower low, you've had a higher high, you're back over the 18-day average. Today's data on the EIA report was certainly not bullish, so the market had its best of the times early on when it was at 61.41, and then it slipped back towards that 18-day average of closes. The WTI is still in a bull scenario. Higher lows, you've had higher highs, you're now overbought though. So formidable resistance, 58.62 to 86, support back at the 18-day average. In the gasoline market, we have the Labor Day driving about to hit us. So the market decided this number was too cheap. Neutral is the 18-day average, and that's what I'm going to call this market. Fighting at that neutral number, we finished at 156.39. The 18-day average is 156.52. This is the first time you hit it in a long time. You haven't hit it since back here at the beginning of the month, and now you're up to it, and I'll call the market neutral at this point. And in nat gas, we're going to get to that funny time of the year now where you don't get extreme heat, you certainly don't get the cold weather coming in, and on a seasonal basis, you start looking for lack of demand. So is this market starting to form that with this action we're getting? If you take out this low right here of 22.1390, what that could do is set up lower highs, then the lower lows. You're back into a downtrend. Target might be 207, or you just might spin between these sideways Bollinger Bands. But I think the market is telling a story where it's concerned about what's coming over the horizon. We know that on the East Coast it's hot and they're in a heat wave. I talk about this and a heck of a lot more in my morning research. Now, let me tell you what it consists of. And no, I'm trying to offer this to you free if you haven't tried it, so don't go away. First off, we offer our charting services, but then in the morning I start you off with a morning video. Now you hear me talk about that for my subscribers. If you haven't tried it, this is your way to do it on my nickel. And it starts off, and it's about a 15-minute recording or so every morning. I record at approximately 6 a.m. It takes about 15 minutes, 20 minutes for me to finish it. Then I have to render it, and it gets out before 7 a.m. Central Daylight Time. That's my goal each day. The charts look like this, very different than the ones you're seeing here. There's more studies, and I do a lot more in them than you're seeing here. I'm able to say, buy here, sell there, do this, do that. The idea is to give you an idea of what I'm seeing, and gee, does that make sense to you? Then my written commentary at approximately 11:30 a.m. Monday through Friday. And then starting on Sunday night through Thursday night at about 8 p.m., I put out a written update with written recommendations, what I'm seeing, my take on the day's events, what I think could happen tomorrow, the reports that are coming out. In other words, a package to get you going and not long. That is the other intent. I don't want you to sit there all day having to watch videos and all. I create them in a way that you can skip to the sections you want. If you want to watch them all, that's fine. If you haven't, and this is the key word, if you haven't had a free trial to what I'm offering, do so. You can go to our website. You'll see under free offers. Sign up for that. Be sure you get the charting software and the other packages at the same time. You can always call my staff and they'll work with you as well. In the meantime, I'm Ira Epstein. You have a great evening, and I will talk to you all tomorrow.